I stared at the screen, my hands frozen over the keyboard. Era, return already filed for this taxpayer.
That couldn't be right.
I hadn't filed my taxes yet. It was only January 28th. Tax season had just started. I was planning to file today, my own return first, then my client's returns all week. But the IRS e-filing system was telling me I'd already submitted my 2025 tax return. I refreshed the page, tried again, same error. I called the IRS practitioner hotline, the special number for CPAs and tax professionals. Spent 40 minutes on hold. Finally got an agent. My e-file was rejected, I said. It's saying I already filed, but I haven't. The agent pulled up my account. I'm showing a return was accepted and processed on December 15th, 2025. That's impossible. I didn't file in December. The return shows a refund of $8,512 issued on December 28th. My blood went cold. Someone filed a fake return in my name? That appears to be the case, ma'am. You'll need to file Form 14039, Identity Theft Affidavit. And I wasn't listening anymore. My brain had shifted into professional mode. Because I'm Michelle Washington, I'm 43 years old, and I'm a certified public accountant with my own tax practice in Dallas, Texas. I've been preparing tax returns for 20 years. I know tax law inside and out. I know how the IRS systems work. I know how fraud happens and how to investigate it. And someone had just committed tax fraud against me, a CPA who literally specializes in catching tax fraud. That was their first mistake. Their last mistake would be thinking they'd get away with it. Let me back up. Let me tell you how I discovered a tax fraud ring that had stolen $200 million from 50,000 people, and how my expertise as a CPA took down one of the largest tax identity theft operations in IRS history. My name is Michelle Washington. I'm a Black woman, 43 years old, born and raised in Dallas. I got my accounting degree from University of Texas at Dallas, passed the CPA exam on my first try, worked at a Big Four firm for 8 years, then opened my own practice in 2019. Washington Tax and Accounting. Just me and 2 staff members, my office manager Janet and my junior accountant Carlos. We handle about 300 clients, individuals, small businesses, a few nonprofits. I specialize in 2 things: tax preparation and forensic accounting. That second part is important. Forensic accounting means investigating financial fraud. I've worked with lawyers on divorce cases where one spouse hid assets, with the FBI on embezzlement investigations, with businesses who suspected employee theft. I know how to trace money, how to spot fraudulent documents, how to find patterns in financial data that prove wrongdoing. And now someone had committed fraud against me, using my social security number, stealing my tax refund. I spent the rest of that Tuesday documenting everything the IRS agent had told me, then I started my investigation. First, I requested a copy of the fraudulent return. The IRS can provide tax transcripts to identity theft victims. I filed Form 4506T online and requested an expedited transcript. While waiting for that, I pulled my credit reports from all 3 bureaus: Equifax, Experian, TransUnion, checked for any fraudulent accounts or inquiries. My credit was clean. No new accounts, no unusual activity. So whoever stole my tax refund had only used my SSN for the fake return, not for opening credit cards or loans. That was good for me, but also unusual. Most identity thieves who have someone's SSN use it for multiple types of fraud. This seemed more targeted, specifically tax refund theft. I also logged into the IRS Get Transcript portal to see what information I could access about the fraudulent return. The transcript showed filing date December 15th, 2025. Refund amount $8,512. Refund issued December 28th, 2025. 2025. Refund type direct deposit. Someone had filed my return a month and a half ago. Got the refund 2 weeks later, and I hadn't noticed because why would I check? I hadn't even thought about my taxes yet in mid-December. I pulled up my actual financial information, my real W-2s, my real income, my real deductions. My actual refund should have been around $3,000. I'm a small business owner. I make quarterly estimated tax payments. I don't usually get huge refunds. So how did the fraudulent return claim an $8,500 refund? The tax transcript didn't show enough detail to answer that. I needed the actual return. It arrived by mail 3 days later, Friday, January 31st. Thick envelope from the IRS. I opened it immediately. The fraudulent return was filed under my name and SSN, but everything else was fake. It showed W-2 income of $68,000 from Datatech Solutions, a company I'd never worked for and didn't exist based on my quick search. It claimed 3 dependents, children I don't have, names I'd never heard of. It claimed earned income tax credit, child tax credit, and additional child tax credit, all credits I wasn't eligible for because I don't have kids and make too much money. Total fabricated refund, $8,512. The return had been e-filed through a commercial tax software, TurboTax, according to the preparer information, but the preparer field showed self-prepared, meaning whoever filed it claimed to be me, filing my own return. The refund was sent via direct deposit to a bank account at a financial institution I'd never heard of, Paycard Financial Services. I looked them up. Paycard Financial Services provides prepaid debit cards. You can open an account online with minimal verification, get a card number instantly, and use it like a bank account. Perfect for fraudsters who need a way to receive stolen refunds without using their real bank accounts. I had enough information now to understand the basic scam. 1. Steal someone's SSN and personal info. 2. File a fake tax return with inflated refund using false W-2s and fake dependents.
3. Direct the refund to a prepaid card.
4. Cash out before the victim realizes.
By the time most victims tried to file their real return and discovered the fraud, the money was long gone. But I'm not most victims. I'm a CPA with forensic accounting training, and I was going to find who did this. I started by trying to trace the prepaid card. Paycard Financial Services had a fraud hotline. I called, explained I was a victim of tax fraud, and asked if they could tell me anything about the account that received my refund. I'm sorry, ma'am, we can't disclose account information. I'm the victim. It's my social security number, my stolen refund. I understand, but we still can't share customer information without a subpoena or court order. Dead end, for now. Next, I researched Datatech Solutions, the fake company on the fraudulent W-2. No website, no business registration in Texas, no hits on Google beyond my search. But when I searched the IRS practitioner forums, online communities where CPAs and tax professionals discuss issues, I found something interesting. Another CPA had posted 2 weeks ago. Anyone else seeing fake W-2s from Datatech Solutions? Had 3 clients whose returns were rejected because fraudulent returns were already filed using that company name. 3 other people. Same fake company. I kept searching. Found more. Datatech Solutions, fake W-2 on fraudulent return. Client's identity stolen, fake return used Datatech Solutions. IRS rejected return, fraudster used Datatech Solutions, W-2. At least 15 CPAs across the country reporting clients whose identities had been stolen by fraudsters using W-2s from this same non-existent company. This wasn't random identity theft. This was organized. Someone was mass-producing fake returns using the same fake company name. I created a spreadsheet, started documenting every case I could find.
Victim name when available.
Location, date fraudulent return was filed. Refund amount, fake company name. Anything else notable? Within an hour, I had 23 cases documented, all filed between November and December 2025, all using fake W-2s from companies that didn't exist, all with inflated refunds between $5,000 and $12,000. And all the refunds went to prepaid cards, not always Paycard Financial Services, but similar services. Green Dot Net Spend, Bluebird, all of them offering instant cards with minimal verification. I was looking at a pattern. A systematic operation targeting thousands of people's tax refunds before the victims even knew tax season had started. That Friday evening, I called the IRS identity theft hotline again, different agent this time. I'm a CPA, I said. I'm a victim of tax identity theft, but I'm also finding evidence that this is much bigger than just my case. I think there's an organized fraud ring filing thousands of fake returns.
Ma'am, you should file your identity theft affidavit and
I've already done that. I'm trying to report a broader fraud operation. Who do I talk to about that? You can file a report with the Treasury Inspector General for Tax Administration, or you can contact IRS Criminal Investigation. Can you transfer me to Criminal Investigation? They don't have a public phone number. You'd need to contact your local field office. I looked up the IRS Criminal Investigation Field Office for Dallas, called them Monday morning. Got voicemail. Left a detailed message explaining who I was, what had happened, and what I'd found.
No callback.
I waited 2 days, called again, left another message. Still no callback. Meanwhile, I kept researching, and the more I dug, the worse it got. I expanded my search beyond just data tech solutions, started looking for other fake company names appearing on fraudulent returns, found them. TechCore Industries, Global Services Inc., Premier Solutions LLC,
Advanced Systems Corp.
Nationwide Business Group.
all of them fake, all of them appearing on dozens of fraudulent tax returns filed in November and December 2025. I documented 68 cases now, and those were just the ones where victims or their CPAs had posted online asking for help. The actual number of victims had to be much higher. Most people don't post in CPA forums. Most people just deal with the IRS directly and struggle through the identity theft recovery process alone. I estimated conservatively that there were at least 500 victims, probably more like 1,000. Average refund stolen, $7,000. If there were 1,000 victims, that's $7 million stolen. If there were more, 10 million, 20 million. This was massive fraud, and the IRS wasn't responding to my attempts to report it. So I did what any forensic accountant would do. I gathered evidence, built a case, and found someone who would listen. I started with the fake W-2s. When you file a tax return claiming W-2 income, you're supposed to attach the actual W-2 form. But with e-filing, you just enter the information from the W-2, the numbers, and the IRS accepts it without seeing the actual document. The system relies on matching. After you file, the IRS matches your W-2 information against what employers report. If the employer reported different numbers or didn't report anything because the company doesn't exist, the IRS flags it. But that matching happens weeks or months after the refund is issued. By then, the money is gone. I realized the fraudsters were exploiting a timing gap. File fake returns early with fake W-2s. Get refunds issued before the IRS completes the matching process. Disappear before anyone notices. It's not a new scam. Tax refund fraud has existed for decades, but the scale and organization of this operation was unusual. I pulled data from the IRS statistics on identity theft. In 2024, the IRS had identified about 500,000 fraudulent returns, claiming $26 billion in fake refunds. The IRS caught and stopped most of them, but about 15% got through. 75,000 fraudulent returns, $4 billion stolen. $4 billion in 1 year, just from tax refund fraud. And the operation I was tracking seemed to be part of that $4 billion. I decided to approach this differently. If IRS criminal investigation wasn't calling me back, maybe I could get attention from a different angle. I contacted the Dallas FBI field office, explained that I was a CPA investigating a large-scale tax fraud operation, and had evidence of potentially thousands of victims. They were more responsive. An agent called me back within 2 days. Ms. Washington, I'm Special Agent Marcus Torres with the FBI's White-Collar Crime Unit. You left a message about tax fraud? Yes, I'm a CPA. I was a victim of tax identity theft. But while investigating my own case, I discovered what appears to be an organized ring filing thousands of fake returns. Tell me what you found. I walked him through everything, my fake return, the fake company names, the 68 cases I documented, the pattern of early filing with inflated refunds sent to prepaid cards. Agent Torres listened carefully, asked good questions, then said, "This is helpful, but tax fraud is primarily IRS jurisdiction, not FBI. Have you reported this to IRS criminal investigation?" "I've tried. They haven't called me back." "Let me reach out to my contact there. Someone should be following up with you. Can you send me the documentation you've compiled?" "Absolutely." I emailed him my spreadsheet and copies of forum posts I'd found. 2 days later, Thursday, February 6th, I got a call from a new number. "Ms. Washington, this is Special Agent Lisa Rodriguez with IRS Criminal Investigation. Agent Torres from the FBI forwarded your information to me. I'd like to discuss your findings." Finally. "Thank you for calling," I said. "I've been trying to reach someone for 2 weeks. I apologize for the delay. We're understaffed and overwhelmed with cases. But based on what Agent Torres shared, this seems significant. Can you walk me through what you found?" I explained everything again, in more detail this time. Agent Rodriguez took notes, asked technical questions about tax filing processes, and seemed genuinely interested. "How many victims have you identified?" she asked. 68 that I've documented from public sources, but I think the real number is much higher, probably thousands.
What makes you think thousands?
Because I'm only seeing cases where victims or their CPAs posted online. Most people don't do that, and the operation has been running for at least 3 months based on the filing dates. If they're filing even 100 fake returns per week, that's over 1,000 victims. That's logical, she said. Do you have any leads on who's behind this? Not yet. The prepaid card companies won't share account information without a subpoena, but I do have the refund routing information, the filing patterns, and the fake company names they're using. That's more than we usually get from initial reports. Ms. Washington, I'd like to formally open an investigation into this. Would you be willing to continue working with us as a consultant? You have expertise we could use. My heart raced. Absolutely. Great, I'll send you a contractor agreement. In the meantime, keep documenting anything you find, and don't discuss this with anyone outside of law enforcement. We don't want to tip off the fraudsters. Over the next 2 weeks, I worked closely with Agent Rodriguez and her team. I provided my analysis of the 68 cases, helped them understand the technical details of how the fraud was being executed, explained the vulnerabilities in the IRS e-filing system that the fraudsters were exploiting. Meanwhile, the IRS pulled data on all tax returns filed using the fake company names I'd identified. The results were staggering.
Data Tech Solutions, 2,847 fraudulent returns.
TechCore Industries, 1,923 fraudulent returns. Global Services Inc., 3,104 fraudulent returns. Premier Solutions LLC, 2,456 fraudulent returns. Advanced Systems Corp., 1,998 fraudulent returns. And those were just 5 of the fake companies. There were at least 20 more. Total fraudulent returns identified so far, 18,200. Total refunds claimed, $142 million. Total refunds actually issued before the IRS caught them, $87 million. $87 million stolen from taxpayers by a single organized operation, and we still didn't know who was behind it. Agent Rodriguez's team worked with the prepaid card companies, got subpoenas, traced where the money went. The refunds hit prepaid cards. Within hours, the money was withdrawn from ATMs or transferred to other accounts. From there, it was converted to cryptocurrency or wired overseas, mostly to accounts in Eastern Europe and West Africa. The people withdrawing from ATMs were low-level money mules, people recruited to open prepaid card accounts and withdraw cash in exchange for a cut. Most were students or desperate people responding to easy money job ads. The mules didn't know who they were working for. They'd been recruited through Telegram or WhatsApp groups, given instructions on opening cards and withdrawing money, paid a few $100s per transaction. Dead end after dead end. But then Agent Rodriguez's team got a break. One of the prepaid card accounts had been opened with an email address that was also used on several dark web forums discussing tax fraud techniques. The IRS cyber team traced the email through forum posts, cryptocurrency transactions, and server logs. It led to a server hosting a custom tax fraud software package, essentially an automated system for generating and filing fake tax returns at scale. The software was sophisticated. It could generate fake W-2s using realistic-looking company names, create tax returns with optimized refund amounts, high enough to steal significant money, low enough to avoid immediate red flags, e-file returns through multiple tax software platforms using compromised credentials, track which returns were accepted and which were rejected, route refunds to a network of prepaid cards. It was tax fraud as a service. And based on server logs, it had been used to file over 50,000 returns. 50,000, not 18,000. The operation was even bigger than we thought. 50,000 fraudulent returns. That meant 50,000 victims, 50,000 people whose social security numbers had been stolen and used to file fake tax returns. And the total amount claimed, based on the average refund of $7,000 per return, the operation had attempted to steal $350 million. The IRS had caught and stopped most of them. Their fraud filters flagged suspicious returns, especially when filed in bulk or with common patterns. but approximately 30% got through. 30% of 350 million is $105 million. $105 million stolen from American taxpayers and sent to criminals running an automated fraud operation. Agent Rodriguez called me with the update. Michelle, we found the server. The operation is much larger than we initially thought. How much larger?
50,000 returns filed, about 100 million stolen.
I sat down. $100 million. Do you know who's running it? We're working on that. The server is hosted overseas, Romania, so we're coordinating with Interpol and Romanian authorities. But we're also tracing the cryptocurrency transactions and trying to identify the developers of the fraud software. How can I help? Keep doing what you're doing. We need your expertise to understand the technical side of how these returns are being generated. Can you analyze the patterns in the fake W-2s? See if there are any signatures or tells that might help us identify the source? Absolutely. Agent Rodriguez sent me data files, anonymized information from the 50,000 fraudulent returns. I spent the next week analyzing them like it was the most important audit of my career. Because it was, I imported everything into specialized accounting software I use for forensic investigations, built pivot tables, ran statistical analyses, looked for patterns. What I found was fascinating and disturbing. The fake W-2s weren't random. They followed specific patterns. Pattern 1, income amounts. Most fake W-2s showed income between $55,000 and $75,000. That's the sweet spot, high enough to generate a decent refund with credits, low enough not to trigger automatic high-income audits. Pattern 2, withholding amounts. The fraudulent returns showed federal tax withholding that was slightly higher than what would actually be withheld at those income levels. This created larger refunds without being obviously wrong. Pattern 3, fake dependents. Most returns claimed 2 or 3 dependents. Names were generated using common first names paired with random last names. But interestingly, the social security numbers for the fake dependents followed a pattern. They were in sequential ranges that suggested they'd been generated by an algorithm, not randomly selected. Pattern 4, filing dates. 92% of the fraudulent returns were filed between November 15 and December 31st of 2025, before most legitimate taxpayers would even think about filing. This gave the fraudsters a time advantage. Pattern 5, tax software used.
The returns were filed through multiple commercial tax software platforms, TurboTax, H&R Block, TaxAct, Free Tax USA, but they were filed using compromised professional preparer accounts. The fraudsters had stolen login credentials from legitimate tax professionals and were using those credentials to mass file fake returns.
That last discovery was critical. The fraudsters weren't just stealing from taxpayers, they were also stealing from CPAs and tax preparers like me, using our credentials to give their fake returns an air of legitimacy. I wondered if my own preparer credentials had been compromised. I immediately changed all my passwords, enabled two-factor authentication, and checked my e-filing history. Fortunately, I found no unauthorized returns filed through my account. But I reached out to other CPAs in my network, warned them about the credential theft, told them to check their accounts. 3 CPAs I knew personally found unauthorized returns filed through their accounts, dozens more, all fake. The operation wasn't just stealing refunds, it was systematically compromising the entire tax preparation industry to enable the fraud. I documented all of this for Agent Rodriguez, showed her the patterns, explained how the fraud software was likely working. This is incredibly helpful, she said. We're building a criminal case, and your analysis is giving us the technical foundation to show this was organized, systematic fraud, rather than just individual cases. What about the victims? I asked 50,000 people who are going to try to file their taxes and find out someone already filed for them. What happens to them? That's the hard part. The IRS has a process for identity theft victims. They file the Form 14039 affidavit, provide documentation, and eventually get their legitimate refund. But it takes months, sometimes over a year. That's not acceptable. These people didn't do anything wrong. They're victims. Why should they be punished with a year-long delay? I agree, but the IRS systems aren't designed to handle fraud at this scale quickly. They're overwhelmed. I thought about my own situation. It had been 3 weeks since I discovered my return was fake. I'd filed the identity theft affidavit, but I hadn't received my legitimate refund. Wouldn't receive it for months, probably. And I was lucky. I'm a CPA with savings. I could afford to wait. Many of the victims couldn't. They were counting on their tax refunds to pay bills, catch up on rent, cover medical expenses. The delay was causing real financial hardship for people who were already victims of fraud. There has to be a better way, I said. Can the IRS flag these 50,000 victims' accounts for expedited processing? They know these returns are fake. Why make the victims jump through hoops? That's above my pay grade, Agent Rodriguez said, but I'll raise it with IRS leadership. Meanwhile, the investigation continued. The IRS cyber team traced the Romanian server hosting the fraud software, got cooperation from Romanian authorities to seize the server and obtain the data. What they found was a gold mine of evidence. The server contained complete source code for the fraud software, database of stolen SSNs, the 50,000 victims, stolen preparer credentials, over 300 compromised CPA accounts, chat logs between the operations organizers, cryptocurrency wallet addresses, instructions for money mules, payment records showing how the stolen money was distributed. The chat logs were in a mix of English and Russian. The organizers were based in Eastern Europe, primarily Russia and Ukraine, and had been running the operation for over 2 years, not just the 3 months we'd initially tracked. Previous tax seasons, they'd stolen smaller amounts, 20 million in 2024, 30 million in 2023. They'd refined their techniques each year, gotten better at evading IRS fraud filters, scaled up their operations. The 2025 season, my tax season, was their most successful yet. $105 million stolen before the IRS caught on. And they'd been planning to do even more in 2026. The server contained a database of 200,000 stolen SSNs ready for the next filing season. 200,000 potential victims. Agent Rodriguez's team coordinated with Interpol and European law enforcement. The investigation now involved IRS criminal investigation, U.S., FBI, U.S., Secret Service, U.S., they handle financial fraud, Romanian National Police, Ukrainian Cyber Police,
Russian Ministry of Interior, limited cooperating.
Europol, Demtatamolupol. It was a massive international operation. In late February, law enforcement made their move, coordinated raids in 7 countries, 12 locations, targeting the fraud ring's leadership, their money launderers, their money mules, and their technical infrastructure. 23 people arrested, including the 3 primary organizers, 2 in Romania, 1 in Ukraine, 7 software developers who built and maintained the fraud system, 6 money launderers who converted stolen funds to cryptocurrencies, 7 money mules who withdrew cash from prepaid cards,
Servers seized, computers confiscated, cryptocurrency wallets frozen.
The operation was dismantled. Agent Rodriguez called me with the news. We got them. All the major players are in custody. That's incredible, I said. What happens now? Extradition proceedings for the foreign nationals, federal charges for the US-based participants, asset forfeiture to recover stolen funds, and a long legal process. What about the victims? The IRS is implementing an expedited process for the 50,000 victims we've identified. They'll get their legitimate refunds within 6 weeks instead of 6 months. And we're working on victim notification, making sure everyone whose SSN was stolen knows about it so they can take protective measures. 6 weeks. Still not ideal, but much better than a year. What about the 200,000 SSNs that were queued up for next season? I asked. Those people don't know they're at risk yet. The IRS is flagging all those accounts for enhanced monitoring. If someone tries to file a fraudulent return using those SSNs, it'll be automatically flagged and stopped. That was good, but I wondered how many other databases of stolen SSNs were out there in the hands of other fraud rings we hadn't found yet. This was one operation, a big one, but tax fraud is a multi-billion-dollar industry. There were dozens, probably hundreds of other operations running similar scams. My own case, my stolen refund, was resolved in early March. The IRS processed my legitimate return and issued my actual refund of $3,147. Took 7 weeks from when I first discovered the fraud.
7 weeks of my time, energy, and professional expertise to get my own money back after someone stole my identity.
And I was one of the lucky ones. I had the knowledge and resources to investigate, to push the system, to work with law enforcement. Most victims didn't. In April, Agent Rodriguez asked me to testify before Congress. The House Ways and Means Committee, which oversees the IRS, was holding hearings on tax fraud and identity theft. They wanted to hear from law enforcement, IRS officials, and victims. I agreed immediately. I flew to Washington, D.C. and testified on April 15th, 2026, tax day appropriately enough. The hearing room was packed. Media cameras, congressional staffers, IRS officials, other victims. Then I was the third witness to testify. Ms. Washington, the committee chairman, began. You're a CPA who became a victim of tax identity theft. Can you walk us through what happened? I told my story, the rejected e-file, the fake return, the $8,000 stolen refund, how I investigated and found the patterns suggesting organized fraud. What would you want this committee to know about the scope of this problem? A congressman asked. The operation that stole my refund filed 50,000 fraudulent returns and stole over $100 million, I said. That's just one operation. The IRS identifies approximately 500,000 fraudulent returns per year, claiming $26 billion. They stop most of them, but about 15% get through. That's $4 billion per year in stolen refunds. $4 billion, the congressman repeated. That's taxpayer money going to criminals. Yes, and it's not just about the money. The victims suffer real harm. They can't get their legitimate refunds for months. Their credit is damaged. Their social security numbers are compromised. They spend hundreds of hours dealing with the IRS, credit bureaus, and law enforcement to clear their names. What can be done to stop this? Several things. First, the IRS needs better fraud detection systems that catch fake returns before refunds are issued, not after. Second, the e-filing system needs stronger authentication, requiring more verification that the person filing is really who they claim to be. Third, prepaid card companies need to implement better controls to prevent criminals from using their cards to receive stolen refunds. And fourth, there needs to be faster relief for victims so they're not punished with year-long delays. Another congresswoman asked, Ms. Washington, you used your expertise as a CPA to investigate this fraud and help law enforcement shut down a major operation. What would you say to other victims who don't have your background? I'd say, don't assume the system will automatically help you. You have to advocate for yourself, document everything, be persistent, and if you can, get professional help, a CPA, a tax attorney, an identity theft advocate. But shouldn't the IRS be doing more to help victims automatically? She pressed. Absolutely. Victims shouldn't need a CPA's level of knowledge to navigate the system. The IRS should make victim relief easier and faster. But until that changes, victims need to be their own advocates. After my testimony, several other witnesses spoke. An IRS official explained their fraud prevention efforts. A victim told a heartbreaking story of waiting 14 months for his refund, while his family struggled financially. A law enforcement agent detailed other tax fraud operations they were investigating. The hearing lasted 4 hours. At the end, the committee chairman announced they would be introducing legislation to strengthen IRS fraud prevention and improve victim relief. Whether that legislation would actually pass was another question. Congress announces a lot of bills. Not all of them become law, but at least the issue was getting attention. Over the next few months, I continued working with the IRS and FBI as a consultant on other tax fraud investigations. My expertise had become valuable to them. I also started speaking publicly about tax identity theft, gave interviews to media outlets, wrote articles for accounting journals, spoke at CPA conferences. My message was consistent. Tax identity theft is massive, it's organized, and it's getting worse. Taxpayers need to protect themselves, tax professionals need to secure their systems, and the IRS needs better tools to detect and stop fraud. I also started a side project, a nonprofit called Tax ID Protect. The mission was to educate taxpayers about tax identity theft and provide resources to help victims. We created educational materials explaining how tax fraud works, step-by-step guides for victims on how to report fraud and recover their refunds, a database of resources, victim advocates, tax professionals who specialize in fraud cases, legal aid organization, a hotline where victims could call for help and advice. We launched in June 2026. Within 3 months, we'd helped over 2,000 victims navigate the identity theft recovery process. Many of them were from the operation that had targeted me, people whose SSNs had been stolen and used to file fake returns, people who were struggling to get their legitimate refunds. Helping them was deeply satisfying. Turning my own victimization into something that protected and helped others felt like justice. In October, I got a call from Agent Rodriguez. Michelle, I wanted to give you an update on the prosecution. Please tell me there's good news, I said. The three main organizers were extradited to the U.S. They're facing federal charges, wire fraud, identity theft, conspiracy, money laundering. If convicted, they're looking at 20 to 30 years in federal prison. That is good news. The other defendants are negotiating plea deals. Most will plead guilty in exchange for reduced sentences. And we've recovered about $40 million through asset forfeiture, cryptocurrency that was seized, bank accounts that were frozen, cash that was recovered. 40 million out of 105 million. What about the other 65 million? Gone, spent, laundered, moved through cryptocurrency tumblers to make it untraceable. We'll never recover it. So the victims lose that money? The IRS will pay out the legitimate refunds to all the victims. So from the victim's perspective, they'll eventually get what they were owed. But the taxpayers, all of us, lose the 65 million that was stolen and couldn't be recovered. That's the thing about fraud. Even when you catch the criminals, you often can't recover the money. It's gone, spent, vanished into the global financial system. The real cost is borne by everyone, through higher taxes, through the expense of fraud prevention systems, through the societal harm of widespread distrust in institutions. As 2026 came to an end, I reflected on everything that had happened. 1 year ago, I tried to file my taxes and discovered someone had already filed in my name. That discovery led me down a path I never expected, investigating a $100 million fraud ring, working with federal agents, testifying before Congress, starting a nonprofit to help victims. My life had changed completely. I was still a CPA, still running my tax practice, but I'd also become an advocate, an educator, a consultant on fraud prevention. And tax season 2027 was approaching. Would there be new fraud operations? Almost certainly. The criminals were constantly evolving, finding new methods, exploiting new vulnerabilities. But now I was ready, and I was helping others get ready too. January 2027 arrived, tax season again. But this time I was prepared. And more importantly, I had helped prepare thousands of others. Tax ID Protect had grown significantly since we launched. We now had 12 full-time staff members, over 500 volunteer tax professionals who donated their expertise, partnerships with 23 state attorneys' general offices, funding from the IRS Taxpayer Advocate Service to expand our victim support programs, a database tracking over 8,000 tax fraud cases. We'd helped 4,000 victims recover their identities and their refunds during 2026, saved taxpayers an estimated $15 million by catching fraud early and preventing it from spreading. And we were just getting started. As January progressed, I monitored the IRS e-filing system closely, watched for patterns, looked for signs of new fraud operations starting up. They came quickly. By January 20th, I'd identified suspicious filing patterns. 300 returns filed using W-2s from Apex Tech Solutions, a company that didn't exist. 250 returns from National Service Group, another fake company. 180 returns from Premier Data Systems, you guessed it, fake, all filed in the same 3-day window, all claiming refunds between $6,000 and $10,000, all directing refunds to prepaid cards. It was happening again. A new fraud operation using the same playbook as the one that had targeted me. But this time, I caught it within days, not weeks. I immediately contacted Agent Rodriguez, sent her the data I'd compiled, explained the patterns I was seeing. We're on it, she said. Thanks to your work last year, we have better monitoring systems in place now. We flagged these same returns independently, and we're about to reach out to you.
What's your plan?
We're going to let them continue for a few more days under surveillance so we can identify more of the network. Then we'll shut them down before too many refunds get issued. How many have been issued so far? 43, total of about $300,000. We've already frozen most of those prepaid card accounts, so the money is secured. 300,000 stolen versus 105 million from my case. The early detection was working. Over the next week, the IRS and FBI monitored the new fraud operation, traced it back to a group operating out of Nigeria, different from the Romanian operation, but using similar techniques. They arrested 5 people in Lagos, seized servers, froze accounts, recovered $280,000 of the $300,000 that had been stolen, and they identified the source of the stolen SSNs, a data breach at a healthcare company that had been hacked 6 months earlier. The hackers had stolen patient records, including SSNs, and sold them to the tax fraud ring. This was a pattern I'd seen repeatedly. Data breaches fed identity theft, which fed tax fraud, which fed other types of fraud in an endless cycle. Every time a company got hacked and lost customer data, criminals used that data for years in various schemes. The only solution was better data security across the board, but that was a much bigger problem than I could solve alone. What I could do was help victims when fraud happened and work to make the system better at detecting and stopping it. Throughout January and February 2027, Tax ID Protect's hotline was overwhelmed with calls. Tax season brings out tax fraud, and with increased media attention on the issue, thanks in part to my testimony before Congress and the publicized bust of the Romanian operation, more victims were aware of the problem and reaching out for help. We handled over 300 calls per day, each one a person whose return had been rejected, whose refund had been stolen, whose identity had been compromised. Stories like mine. People who tried to file their taxes and discovered someone had already filed for them. People who were confused, scared, angry, people who didn't know what to do or where to turn. Our volunteers walked them through the process. File Form 143-9 with the IRS. Request a tax transcript to see the fraudulent return. File a police report, required for many identity theft protections. Place fraud alerts with credit bureau.
Report to the FTC's identitytheft.gov.
Monitor accounts for other signs of identity theft. Be patient. Recovery takes time. That last point was the hardest. People needed their refunds. They had bills to pay. And telling them they had to wait weeks or months was difficult. But we also helped them navigate IRS bureaucracy, connected them with victim advocates, and provided emotional support. Sometimes just knowing someone understood what they were going through made a difference. In March, the congressional legislation that had been proposed after my testimony finally moved forward. The Taxpayer Identity Protection Act of 2027 passed the House with strong bipartisan support. It included several key provisions. Provision 1, enhanced IRS fraud detection, required the IRS to implement real-time fraud detection systems that could catch suspicious returns before refunds were issued, not after. Provision 2, two-factor authentication, for e-filing. Starting in 2028, all e-filed returns would require two-factor authentication, verifying identity through something you know, password, something you have, phone, or something you are, biometric. Provision 3, prepaid card verification. Financial institutions offering prepaid cards used for tax refunds would be required to implement stronger identity verification and report suspicious activity to the IRS. Provision 4, expedited victim relief. The IRS would be required to process legitimate returns from identity theft victims within 30 days and provide interim financial relief if processing took longer. Provision 5, data breach notification. Companies that experience data breaches involving SSNs would be required to notify affected individuals within 30 days and offer free credit monitoring and identity theft protection for 3 years. Provision 6, increased penalty. Federal penalties for tax identity theft would increase from 5 to 15 years in prison, with mandatory minimums for organized operations. Provision 7, funding for IRS modernization. Congress authorized $2 billion over 5 years to modernize IRS systems and improve fraud prevention capabilities. The bill passed the Senate in April and was signed by the President in May. This legislation represents a major step forward in protecting American taxpayers from identity theft and fraud, the President said at the signing ceremony. Thanks to the brave victims who came forward and shared their stories, we now have the tools to better detect, prevent, and prosecute these crimes. I was invited to attend the signing ceremony, stood in the White House with other advocates, victims, and lawmakers who had worked on the bill. It felt surreal. A year and a half ago, I was a CPA in Dallas, trying to figure out why my tax return had been rejected. Now I was at the White House watching the president sign legislation that would protect millions of taxpayers. But I knew the work wasn't done. Legislation was just the beginning. Implementation was what mattered. The IRS had to actually build the new fraud detection systems. Financial institutions had to actually implement the verification requirements. Companies had to actually improve their data security. And all of that would take time, years, probably. Meanwhile, the criminals weren't waiting. They were already adapting to the new environment, finding new vulnerabilities, developing new techniques. Throughout 2027, I tracked emerging fraud trends. Trend 1: synthetic identity tax fraud. Instead of stealing real SSNs, fraudsters were creating synthetic identities, combining real SSNs, often from children or deceased individuals, with fake names and information. These synthetic identities could pass basic verification checks, but didn't belong to any real person.
Trend 2: W-2 phishing.
Criminals were sending fake emails to employees pretending to be from HR departments, asking them to verify their W-2 information. When employees provided their data, the criminals used it to file fraudulent returns before the employees filed their legitimate returns. Trend 3: tax preparer account takeovers. Instead of stealing one victim's identity at a time, criminals were compromising entire tax preparer accounts, giving them access to hundreds or thousands of clients' information that they could use for fraud. Trend 4: refund transfer hijacking. Some taxpayers use refund transfer products where the refund is deposited into a temporary account controlled by the tax preparer, who then distributes it to the taxpayer. Criminals were hacking these accounts and redirecting the refunds before taxpayers received them. Each trend required new detection methods, new protections, new education efforts. Tax ID Protect adapted. We created new educational materials, warning about W-2 phishing, worked with tax preparation software companies to implement better account security, trained tax professionals on how to recognize account takeovers. By the end of 2027, we'd expanded our operation significantly, helped over 12,000 victims, trained 15,000 tax professionals on fraud detection, created partnerships with 50 community organizations to provide free victim assistance,
Launched a Spanish-language hotline to serve non-English-speaking victims.
published research on emerging fraud trends, testified at state legislatures about local fraud prevention measures. Our impact was measurable. States where we operated saw a 23% reduction in successful tax identity theft compared to states where we didn't have a presence. That meant thousands of people who didn't become victims because we'd educated them about protecting their information or because we'd helped catch fraud early. In December 2027, I was named one of Accounting Today's top 100 most influential people in accounting. The recognition was nice, but more importantly, it gave me a platform to advocate for further reforms. I used every speaking opportunity, every interview, every article to emphasize the same points. Point 1. Tax fraud is a systemic problem that requires systemic solutions. We can't arrest our way out of this. We need better data security, better authentication, better systems. Point 2, victims shouldn't be blamed or punished. Identity theft is not the victim's fault. The system should make recovery easy, not difficult. Point 3, prevention is more cost-effective than response. Every dollar spent on fraud prevention saves $10 in fraud losses and recovery costs. Point 4, this is everyone's problem. Tax fraud drives up costs for all taxpayers. When criminals steal refunds, the government still has to pay legitimate refunds to victims. That's money that comes from all of us. As 2028 began tax season again, I saw the impact of the reforms. The IRS's new fraud detection system, built with the funding from the Taxpayer Identity Protection Act, was working. Early statistics showed fraudulent return detection rate increased from 65% to 87%. Average time to detect fraud decreased from 42 days to 8 days. Refund theft prevented. Approximately $1.2 billion in the first 6 weeks of 2028 tax season. $1.2 billion. That's fraud that would have happened but didn't because the system was better. But that also meant criminals were attempting to steal $1.2 billion. The scale of the problem was staggering. And the 13% that still got through, that was still $156 million stolen. Progress, but not victory. The battle continued. In February 2028, Agent Rodriguez called me with news. Remember the 3 main organizers from the Romanian operation? The ones who were extradited?
Of course. Are they going to trial?
They took plea deals. All 3 pled guilty to conspiracy to commit wire fraud and identity theft. They're each getting 20 years in federal prison, no parole.
20 years. That's significant.
It sends a message. Tax fraud isn't a low-risk, high-reward crime anymore. We're catching these operations, we're prosecuting them, and the penalties are severe. What about the other defendants? Most took plea deals with shorter sentences, 5 to 10 years. A few went to trial and were convicted. All told, we've put 37 people in prison from that one operation. And the money? We recovered $53 million through asset forfeiture, up from the $40 million I told you about before, found more cryptocurrency wallets and offshore accounts. The money is being distributed to victims proportionally based on what was stolen from them. So victims are getting restitution? Yes, not full restitution. We only recovered about half of what was stolen, but they'll get something. Average victim will receive about $3,000. $3,000. Not enough to fully compensate for the harm and hassle, but better than nothing. That's good news, I said. Thank you for keeping me updated. Thank you for everything you did to make this case possible. Without your initial investigation and expertise, we might never have caught them. After we hung up, I reflected on that. 2.5 years ago, I tried to file my taxes and got an error message. That frustrating moment led to an investigation that exposed a $100 million fraud operation, led to 37 criminal convictions, recovered $53 million for victims, resulted in federal legislation, created a nonprofit that helped thousands of victims, changed how the IRS detects and prevents fraud, raised public awareness about tax identity theft, all because I didn't just accept the error message. I investigated. I asked questions. I used my expertise. I persisted. That's what this story is about. Not just tax fraud, but what happens when an informed, determined person refuses to be a passive victim. In March 2028, Tax ID Protect celebrated its 2nd anniversary. We'd helped over 20,000 victims since launching, trained over 40,000 tax professionals, reached millions of people through our educational campaigns, and we'd prevented an estimated $75 million in fraud through early detection and intervention. But the most meaningful impact wasn't measured in dollars. It was measured in the individual people whose lives we'd helped, like Maria, a single mother in Houston, whose tax refund, $3,000, was stolen just before she needed to pay rent. We helped her get expedited processing from the IRS. She received her refund in 3 weeks instead of 3 months. Avoided eviction. Like James, a retired veteran in Arizona whose identity was stolen and used to file fake returns for 3 consecutive years. We helped him get his identity secured, his credit repaired, and his legitimate refunds processed. After 3 years of frustration, he finally had resolution. Like Keisha, a teacher in Atlanta who discovered her entire school's staff, 47 people, had their W-2 information stolen in a phishing attack. We helped all 47 teachers report the fraud, secure their accounts, and recover their refunds, prevented what could have been a $500,000 theft. Those stories kept me going. Every victim we helped felt like a small victory in a much larger war. As tax season 2028 progressed, I continued to balance my roles: CPA with a growing practice, nonprofit director, advocate, educator, consultant to law enforcement. It was exhausting but fulfilling. I was making a difference, real, measurable difference. In April 2028, I spoke at the National Association of Tax Professionals Conference, over 5,000 CPAs and tax preparers in attendance. My message was direct. Tax fraud is not someone else's problem, it's our problem. As tax professionals, we're on the front lines. We're often the first to detect fraud when our clients' returns are rejected. We're the ones clients call when they're victims. We have a responsibility to be informed, to be vigilant, and to help. But more than that, we have a responsibility to protect our own practices. Over 400 tax preparers had their credentials stolen and used to file fraudulent returns last year. Are your systems secure? Are you using two-factor authentication? Are you training your staff to recognize phishing attempts? This is professional survival. If your practice is compromised, you could be liable for the fraud committed using your credentials. You could lose your license. You could face legal action. So here's what I'm asking. Take security seriously. Educate your clients. Report fraud immediately when you see it. And support systemic reforms that make the entire tax ecosystem more secure. The speech was well received. Afterward, dozens of CPAs approached me with questions, stories, requests for help. The tax profession was waking up to the threat. Finally, in June 2028, the IRS released its annual fraud statistics for the 2028 tax filing season. Total fraudulent returns filed 428,000, down from 500 in 2027. Total fraud detected and stopped 387,000, Detection rate 90%. Total fraud that got through 41,000. Total stolen through successful fraud $287 million, down from $1.2 billion in 2027. $287 million was still a massive amount, but compared to previous years, it represented significant progress. The IRS attributed the improvement to several factors: better fraud detection algorithm, the new authentication requirements, increased cooperation with law enforcement, public awareness campaigns, partnerships with organizations like Tax ID Protect. I was proud to have played a role in that improvement, but I also knew 41,000 victims was still 41,000 too many. Each of those numbers represented a person whose identity was stolen, whose refund was taken, whose trust in the system was violated. The work continued. As 2028 progressed into summer and fall, I started thinking about the future. Tax ID Protect was growing beyond what I could manage alongside my CPA practice. We needed to formalize our structure, expand our board, hire more staff, secure larger funding. In September, we brought on a full-time executive director, someone with nonprofit management experience who could handle day-to-day operations, while I focused on strategy, advocacy, and technical expertise. This allowed me to return more focus to my CPA practice, which I'd somewhat neglected while building the nonprofit. But my practice had changed too. I was now known as the tax fraud CPA. Clients came to me specifically because they wanted someone who understood identity theft, who could help them protect their information, who could spot fraud early. I also took on consulting work with other CPAs whose clients had been victimized, taught them how to investigate fraud, how to work with the IRS, how to help their clients recover. It was a niche, but an important one, and it turned out to be quite profitable. I charged premium rates for my expertise, which helped fund both my practice and my nonprofit work. In November 2028, I received an unexpected call. Ms. Washington, this is Deputy Commissioner Wilson from the IRS. Do you have a few minutes? The Deputy Commissioner, one of the top officials at the IRS. Of course, I said. I wanted to thank you personally for your work over the past 2 years, your investigation of the Romanian fraud operation, your testimony before Congress, your nonprofit's victim assistance. It's made a real difference. Thank you, I appreciate that. I'm calling because we have a proposal. The IRS is creating an external advisory council on tax fraud prevention. It will consist of 12 members from outside the IRS, tax professionals, fraud experts, victim advocates, technology specialists. We'd like you to serve on the council. What would that involve? Quarterly meetings with IRS leadership to discuss emerging fraud trends, evaluate the effectiveness of our prevention efforts, and provide recommendations for improvement. It's a 3-year appointment. I'd be honored. Excellent. We'll send you the details. Thank you for your service to taxpayers. After we hung up, I sat there processing it. 2.5 years ago, I couldn't get the IRS to return my phone calls. Now the Deputy Commissioner was asking me to advise the agency on fraud prevention. It was surreal, but it also made sense. My unique perspective, victim, investigator, CPA, nonprofit director, gave me insights that pure policymakers might not have, and I intended to use that position to push for continued reforms. As 2029 began another tax season, I reflected on how much had changed since January 2026 when I first tried to file my taxes and received that error message. The landscape of tax fraud prevention was fundamentally different. Better detection systems, catching 90% of fraud, new authentication requirements, making fraud harder, tougher penalties, discouraging criminals, more support for victims, greater public awareness, but the criminals were still out there, still adapting, still finding new methods. In January 2029, I identified a new fraud technique. Criminals were filing fake tax returns for deceased individuals. They'd scrape obituaries for names and dates of death, obtain SSNs from data breaches, and file returns before the Social Security Administration updated the IRS's death records. It was ghoulish but effective, and it was happening at scale. We estimated about 5,000 returns filed for deceased taxpayers in just the first 3 weeks of 2029. I reported it immediately to the IRS and to my contacts at the Social Security Administration. Within 2 weeks, they implemented a new data sharing protocol that updated death records in real time. Problem solved, for now. But there would be new problems tomorrow, new schemes, new vulnerabilities. The The cycle never ended. That's the nature of fraud. It's an arms race. As defenses improve, attacks evolve. The only way to stay ahead is constant vigilance, constant adaptation, constant innovation. And that's exactly what I intended to keep doing. In February 2029, I gave a TEDx talk titled What a Stolen Tax Refund Taught Me About Systemic Change. The core message: when I discovered someone had filed a fake tax return in my name and stolen my refund, I had a choice. I could accept the situation, file my paperwork, wait months for resolution, and move on with my life. Or I could ask questions. Why did this happen? How did it happen? How many other people is this happening to? What can be done to stop it? I chose questions, and those questions led to an investigation that exposed a $100 million fraud operation and helped create systemic changes that now protect millions of taxpayers. But here's the key. I had the expertise to ask the right questions and the resources to pursue the answers. Most people don't. Most victims of fraud don't have a CPA's understanding of tax systems. Most don't have connections to law enforcement. Most don't have the time or energy to investigate. That's a systemic problem. We've built systems where victims need specialized knowledge to get justice. That's backwards. Justice shouldn't require expertise. So what's the solution? Better systems. Systems that protect people by default, not by expertise. Systems that detect fraud before it harms victims, not after. Systems that treat victims with compassion, not suspicion.
My tax refund was stolen, but I used that experience to help build better systems. And that's what I want everyone to take away from this. When you experience injustice, you have a choice. Accept it or change it. I chose change, and you can too. The talk went viral, over 2 million views in the first week, thousands of comments from people sharing their own fraud experiences and thanking me for advocating for them. It was gratifying. But more importantly, it spread awareness. Millions of people who might not have known about tax identity theft now understood the threat and how to protect themselves. As tax season 2029 wound down in April, I looked at the results. Fraudulent returns filed 312,000, continuing to decline. Detection rate 93%. Successful fraud 22,000 returns, $154 million stolen. 154 million, still a massive number. But compare it to the 350 million attempted in 2026 when I was victimized. That's $196 million that wasn't stolen because systems improved. That's 46,000 fewer victims. That's countless hours of frustration, months of delays, and years of financial harm prevented. Progress, not victory. The criminals were still out there, still trying, still occasionally succeeding. But progress. And I was part of that progress. My investigation, my advocacy, my nonprofit, my work with the IRS. One CPA refusing to be a passive victim had helped create real, measurable change. That's what I want people to understand from my story. Tax fraud is massive, organized, sophisticated. It costs taxpayers billions of dollars per year and causes immeasurable harm to victims. But it's not inevitable. It's not unstoppable. Better systems can detect it. Better laws can punish it. Better education can prevent it. And better support can help victims recover from it. But those improvements don't happen automatically. They happen because people demand them. People like me who refuse to accept injustice. People who ask questions, investigate problems, and push for solutions. If you're a victim of tax fraud or any fraud, don't assume the system will automatically help you. Be your own advocate. Document everything. Ask questions. Be persistent. And if you have expertise, whether you're a CPA, a lawyer, a tech expert, or anything else, use that expertise to help others and to push for systemic improvements. That's how change happens. Not through grand policy announcements, but through determined individuals who refuse to accept that things can't get better. My tax refund was stolen in January 2026. That theft led me on a journey I never expected. From victim to investigator to advocate to nonprofit director to federal advisor. I helped catch criminals, I helped change laws, I helped protect millions of taxpayers, and I helped thousands of victims recover their identities and their refunds. All because I refused to accept that error message at face value. All because I asked why, how, who, what can be done.
Subscribe to The Quiet Reckoning for daily stories where CPAs expose tax fraud, where one stolen refund leads to a $100 million investigation, where expertise becomes advocacy, and where ordinary people armed with determination and knowledge can change broken systems.
New story every day, The Quiet Reckoning.